Hi friends, I am CA Mahesh KS here. In this video, we will quickly revise Section 7, Scope of Supply and Section 8, Tax Liability of Composite and Mixed Supply and related Schedule 1, Schedule 2 and Schedule 3. Section 7 says that if following three conditions are cumulatively satisfied, it is a supply, it is a taxable event and GST will be attracted. Out of these three conditions, even one condition is not satisfied, it is not a supply, it is not a taxable event and GST will not be attracted. What are those conditions? Condition number 1, there should be supply of goods or services. Condition number 2, the supply should be for consideration. And condition number 3, the supply should be in the course or furtherance of business. If all the three conditions are cumulatively satisfied, it is a supply, it is a taxable event and GST will be attracted. Out of three conditions, even one condition is not satisfied, it is not the supply and GST will not be attracted. Supply includes disposal, exchange, barter, transfer, sale, rental, lease, license. And now one more item is added. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration is also a supply, is a taxable event and GST will be attracted. If I want to say in simple language, there is one apartment. In that apartment, around 50 residents are living and they have one resident welfare association. These resident welfare association every month collect electricity charges from the residents and pay to the government. Doing this service, that association collects rupees 50 as a service charges from each resident. This provision says that the service charges collected by the association is a supply, it is a taxable event and GST will be attracted on that service charges. Condition number 1 is there should be supply of goods or services. Money and securities are neither goods nor services. So, supply of money and securities, even for consideration, even in the course or furtherance of business, is not a supply, is not a taxable event, and GST will not be attracted. But any charges collected for use of money or transaction related to money is a supply, is a taxable event and GST will be attracted. For example, service charges collected for issuance of demand draft, service charges collected for issuance of letter of credit. The service charges alone is a supply, is taxable event and GST will be attracted on that service charges. Second condition is the supply should be for consideration. It should not be for free of cost or without consideration. If it is free of cost or without consideration, it is not a supply, it is not a taxable event and GST will not be attracted. But there is one exception to this condition, that is T, transfer or disposal of business asset where ITC has been taken, or related party or distinct persons transactions, I, importation of service from related persons in the course or furtherance of business, P, principal agent transactions. All these four cases we will discuss in detail. Transfer or disposal of business asset where ITC has been taken. The transfer should be permanent transfer. For example, purchase a laptop. The cost of laptop is 50,000 rupees. GST on that purchase is 9,000 rupees. The total invoice value is 59,000 rupees. The supplier capitalized the total invoice value of 59,000 rupees and claim depreciation on this whole invoice value of 59,000 rupees year after year. At the end of the second year, the supplier transfer this laptop to a charitable institution for free of cost or without consideration, or throw it in dustbin as the case may be. In either case, this is not the supply, it is not the taxable event and GST will not be attracted. The reason is, in this case, The supplier has not taken the ITC on GST paid by him at the time of purchase of laptop. Scenario 2. Suppose the supplier purchased the laptop and capitalized the cost of that laptop, rupees 50,000, and the GST portion he took ITC. He capitalized 50,000 rupees the cost of laptop and GST portion he took ITC and claimed depreciation on cost of 50,000 rupees year after year. At the end of the second year, he transferred this laptop to a charitable institution for free of cost or without consideration, or he thrown this laptop into a dustbin, as the case may be. In either case, it is a supply, it is a taxable event, and GST will be attracted. The reason is, in this case, the supplier took ITC on GST paid by him at the time of purchase of laptop. Next point is supply between related persons or distinct persons. A shoe manufacturer in Chennai in Tamil Nadu having his sales depot in Bangalore, Karnataka. Both are registered under same PAN, so they are distinct persons. The shoe manufacturer do stock transfer to his sales depot in Bangalore, Karnataka for making further supply to his customers in Karnataka. In this case, the sales depot is not going to give any consideration to the head office in Chennai. In this case, even though there is no consideration, it will be treated as deemed supply. It is a taxable event and GST will be attracted. Employer give gift to the employee up to the value of rupees 49,999 in a financial year. No GST will be attracted. If the employer give gift to the employee for rupees 50,000 or more in a financial year, then GST will be attracted. Perquisite is not a taxable supply, provided there is a contractual agreement between the employer and the employee. Next is supply between principal and agent. Principal supplies goods to the agent. Agent supplies goods on behalf of the principal and issue invoice in his own name. In this case, goods supplied by the principal to the agent is a taxable supply and GST will be attracted. Scenario 2. Agent procure goods from third person on behalf of the principal and receive invoice in his own name. Subsequently, agent supplies to the principal. In this case, the goods supplied by agent to the principal is a deemed supply. It is a taxable event and GST will be attracted. The last one is importation of service from related person in the course or furtherance of business. For example, SBI in India procure some services from SBI USA. SBI India and SBI USA both are related persons, and he procures such services in the course or furtherance of business without consideration. In this case, even though there is no consideration, it will be treated as deemed supply. It is a taxable event and GST will be attracted. If we summarize all these four provisions, say TRIP, transfer of business asset where ITC has been taken. In this case, ITC is involved. In all other three cases, transaction between related persons or distinct persons, importation of service, principal and agent transactions. These are related party transactions. If you want to summarize these four provisions in simple language, where there is no consideration, where ITC is not taken, and supply is to unrelated party, it is not a supply, it is not a taxable event, and GST will not be attracted. Condition number 3 is there should be supply in the course or furtherance of business. The supply should not be in personal nature. If it is in personal nature, it is not a supply, it is not the taxable event, and GST will not be attracted. But there is one exception to this condition, that is importation of service. Importation of service for personal nature, not in the course or furtherance of business, is a taxable event and GST will be attracted. In the beginning, I told you that if three conditions are cumulatively satisfied, it is a supply, it is a taxable event and GST will be attracted. But there are 10 circumstances where even though all the three conditions are satisfied, it is not a supply, it is not a taxable event and GST will not be attracted. What are those 10 circumstances? A, B, C, D, E, L, M, N and H, W. Homework. A. Actionable claims other than lottery, betting and gambling. Lottery, betting and gambling is a supply, taxable event and GST will be attracted. Actionable claims other than these three items are not supply, not taxable event and GST will not be attracted. B stands for building, sale of building. Sale of building is not a supply, not a taxable event and GST will not be attracted, provided entire consideration is paid after issuance of completion certificate or its first occupation, whichever is earlier. If even ₹1 consideration is paid before issuance of completion certificate or its first occupation, whichever is earlier, then it is a supply, it is a taxable event and GST will be attracted. C. Courts or tribunal. Services provided by courts or tribunal is not a taxable supply. D. Death expenses like funeral expenses, crematorium, transportation of deceased, all are out of scope of supply. E. Employee-employer. Services provided by employee to the employer in the course or in relation to employment is not a taxable supply. L. Sale of land. Sale of land is not a taxable supply. M. MP, MLA, member of Panchayat, member of local authorities, member of municipality, member of constitution like president, prime minister, vice president. The services provided by all these members are not taxable supply. N. Supply from one non-taxable territory to another non-taxable territory. For example, there is a supplier in India. He procures some goods from supplier in US and he requests the vendor to make supply to his customer in Japan directly without entering the goods into India. It is not a supply, it is not the taxable event and GST will not be attracted. Next is H. IC sales. Supplier in India procures some goods from vendor in US. Goods started from US port and not yet reached the Indian port. Goods are in IC in ship. Supplier 1 in India supply that goods to supplier 2 in India through endorsement of document. It is not a supply, it is not the taxable event and GST will not be attracted. The last one is supply from customs warehouse. W for warehouse. Supply from customs warehouse. Supplier in India procures some goods from vendor in US. Goods reached the customs port. It is lying in customs warehouse. Supplier 1 in India supply these goods to supplier 2 in India when goods are lying in customs warehouse before clearance for home consumption. This is also not a supply, it is not the taxable event and GST will not be attracted. We cover all the key provisions in section 7 except schedule 2. Now we will see schedule 2. Schedule 2 advises the activities or transactions to be treated as supply of goods or supply of services. In schedule 2, there are total 6 paras. We can broadly categorize the 6 paras into balance sheet item and profit and loss account items. In balance sheet, in asset side, We have land, we have building, plant and machinery, inventories, goods, other business assets, intangible assets, and intellectual property rights. The transfer of title of all above assets or disposal of all above assets is goods. Title in goods under an agreement that property passed at a future date is goods. For example, finance lease, hire purchase, etc. Transfer of right to use like lease, tenancy, license to occupy, easement, renting out, temporary transfer. Permanent transfer means it is goods. Temporary transfer, permitting to use or enjoyment is service. Any right or undivided share in goods without transfer of title is services. When come to profit and loss account, in income and revenue side, if the supplier is making absolute supply of goods, no issue. Absolute supply of services, no issue. Where the supplier makes the mix-up of both goods and supplies, like job work, the treatment or process applied to another person's goods, or restaurant services, or building constructions, works contract, IT software, upgradation, software implementation, development, design, adoption, customization, software enhancement. In all above cases, even if material value is 99% and service value is only 1%, still it will be treated as supply of service only. An agreement to refrain from an act, an agreement to tolerate an act, or an agreement to do an act is supply of service. With this, we completed section 7, scope of supply. Now we will go to section 8, tax liability on composite and mixed supply. In case of composite supply, tax liability shall be the rate applicable to principal supply. For example, there is a composite supply of mobile and charger. The GST rate applicable to mobile is 18% and GST rate applicable to charger is 28%. In this case, though the GST rate applicable to charger is 28%, it will be taxed at the rate of 18%, which is applicable to principal supply, that is mobile. Suppose along with this mobile, instead of charger, some exempted goods are supplied which is chargeable at the rate of 0%. In this case, though the accepted goods are GST rate of exempted good is 0%, it will be taxed at the rate of 18%, which is applicable to principal supply, that is our mobile. When come to mixed supply, the tax liability is calculated at the rate applicable to the supply that attracts highest rate of tax. For example, there is a mixed supply of chocolate, biscuit and beverages with a single price of rupees 1000. The GST rate of chocolate is 28%, the biscuit is 18% and beverage is 12%. In this case, this mixed supply will be taxed at the rate of 28%, which is the highest rate of tax applicable in this mixed supply. Thanks for watching. Please like, subscribe and share with your CA and CMA friends. Thank you.